Hello, everyone. My name is Graham Parham. I'm with Highlands Residential Mortgage. I have my production partner here with me today, Aaron Stelly, and I also have another gentleman that's with our company. His name is Derek Shaw. Derek is kind of a new to our company. Derek has had a lot of years experience in credit. So today we're going to talk about credit, how it impacts doing loans, how it impacts your overall world for that matter. Just as a disclaimer, we are not credit experts. We are not giving advice. We are just telling you our opinions about things. And myself and Aaron, we've been doing this for many years, and people ask us all kinds of questions about credit. And we have so much knowledge that we can share with them about why it affects this and what happens here. But we'll kind of get all into that. So, Derek, you've been in the credit world for many, many years, and you worked as a credit expert, or is that the correct title or terminology?
Yeah, I've doing it since 2010. They named me the Credit Ninja.
Okay.
Love it.
Derek was basically a credit repair a person. Would that be correct?
Yeah, credit repair is really ways to maximize the score. Partnering with loan officers such as yourself, helping people get approved for loans.
The credit repair companies, there's so many out there, and to be honest with you, fortunately, in the world that Aaron and I live in, our average credit score is like 778. So we don't have a lot of credit issues. Every now and then we'll have some things that kind of pop up that we have to address, but for the most part, we have some really good credit borrowers, but sometimes we don't. And I want to talk to you today a little bit more about what can affect your credit, how to make it better. Derek can share with you how some of the ways that he has been able to do that for clients. But we're just going to get right into it. So, I mean, credit is something that the individual has to maintain themselves throughout their life. I mean, it's their credit, it's no one else's but theirs. And if you don't maintain it and keep it good, then chances are you're probably not going to get the things you want in this life, like mortgages, cars, all credit cards, you name it, anything that requires credit scoring. Okay. And there's three credit bureaus that actually score. There's Experian, Equifax, and TransUnion. Those are the three bureaus that are the reporting bureaus. And as a lender, a mortgage lender, we actually, when we pull the credit, we pull from all three of the bureaus into a tri-pull report, and it gives us an average. And typically we take the middle score as the file itself score and run with it. As an example, if we have a borrower and a co-borrower, and the middle score of the borrower is 750 and the middle score of the co-borrower is 720, unfortunately, we have to take 720 as the common denominator. It's always the lower one. A lot of times people say 720, hey, I just pulled over here at Credit Karma and I got a 789. I don't understand. Derek, you want to jump in and help us out on that one?
Yeah, really quick about the Credit Karma and the report that you guys pull is the difference between a soft pull and a hard pull. So any report that the consumer can get by themselves online, like Credit Karma, their credit card company, their bank, that is a soft pull, just a rough estimate about where you're at. And usually it's always higher than where you actually are if you were to pull it with a loan officer.
I always say it, the free Credit Karma, or Credit Karma, free credit report, all those people out there that are, even some of the banks and credit card companies have something set up for you and to say, okay, here's your credit. And you're right, that's a different algorithm. And in my opinion, I think they kind of skew it more toward making you feel better. Okay. I think, go ahead, Aaron.
Yeah, I was going to say I'd absolutely second that. I'm actually in the midst of going through a refinance on one of my investments now, pulling out some cash for down the road. And exactly what y'all just said applied to me. If I look at my bank or credit card company, my actual hard pull score came in 35, 40 points under, still at a great level, but significantly under than what that soft free credit pull was showing me online.
Which made you feel good, right? Hey, look at me, I'm walking on water. I got an 800 credit score.
Exactly.
And I've seen some pretty high credit scores in my day. I think 15 maybe is probably the highest I've ever seen. Aaron, I don't know if you recall we're seeing anything higher than that.
It's rare that we get that actual hard pull, the mid score coming in, from the three bureaus in that 800 tier. I know the three bureaus, Derek, go up to kind of different levels, 815, 840. I'm not sure exactly off the top of my head, but what I do want to throw out there, at least I know I can't speak for every lender out there, but a lot of lenders, once you get to a certain rate threshold, you're going to be in basically that best interest rate bracket. So for us over at Highlands, for most all our products, once you're 740 plus for that mid score, you're getting the best rate that we can offer at the end of the day.
So let me expand on that a little bit. And that is correct. 740 for Fannie Mae loans is pretty much the highest threshold. The jumbo category, sometimes they like to see 760. And even the non-QM stuff, they like to see a higher credit score, and they judge it. If you get the 760, 780, they actually make your rate a little bit better. But our threshold's at 740, and people say, hey, I've got a 750. I don't want to get a credit pull because it's going to screw up my credit. No, it's not. And Derek, let's talk a little bit about inquiries. Okay. Inquiries haven't, my opinion, this is once again my opinion, because I'm constantly pulling my credit because I'm buying and selling real estate. Mm-hmm. And a pull every 3 to 4 months, in my opinion, is not going to really sneeze at your credit score. There's other things that influence credit scores going up and down. Can you share some of that with us?
Yeah, let's look at inquiries. So inquiries stay in credit report for 2 years maximum. Once they go 2 years, they fall off. Usually when you're shopping for one item, so car shopping or mortgage shopping, any pull done within a 30-day time period counts as only one hit. So you can get your credit pulled 10, 20 times on your credit report, show up 10, 20 times, but it only counts as one hit because you're shopping for one item.
Now, if one mortgage company pulls today and another one pulls tomorrow and another one pulls the next day, then we pull it, is that not multiple inquiries?
It is multiple, but it does count as one hit.
And what's the time period on the one hit?
30 days.
30 days. Interesting. I did not know that. So I think I looked online not too long ago, where the average credit score in the U.S. is 700. Is that an incorrect statement?
No, yeah. So as of like October 2021, Experian said 714 was the national average credit score.
Wow, that's great. That's great. I know that a lot of times I've seen credit scores go down for crazy reasons. And once again, I'm not an expert, and this is just what I've seen. As an example, we had a client that was doing a 5-pack. He was buying 5 properties at one time. And so once he closed and funded, of course, the servicer reported on his credit report, he's got 5 new loans. And I've always told people that anytime that you extend your credit and you raise it up to the highest level within that maximum allowance, that has a tendency to bring your rates, or bring your score down. As an example, I'm going to get a credit card. I got a $5,000 limit. I jack it up to $4,999. That's going to drive your score down. Well, kind of the same principle works here with mortgages from time to time. Once again, I've only seen it a few times where, okay, I got a new home, and there's 5 of them, and they're $100,000 piece, and that's the loan we gave them. And so the highest limit's 100,000, and then their balance is 100,000. So they're hitting that ceiling again. You want to share on that, Derek?
Yeah. So going through, part of it is new accounts. Whenever you just open a new account, just because you open a new one, your score is going to take a hit. It's a new item. So your new inquiry, new account, score is going to drop initially. However, with on-time payments over 3 to 6 months, it's going to go back up to where you were, even higher.
Okay. What's a normal time period if you kind of leave your credit alone for it to cure itself? That's kind of in the middle of this, I guess.
Yeah. So 2-part question. I would say if you have negative items, it takes that item 7 years to fall off of your report.
Okay.
The more recent a negative item is, whether it's a collection or late payment, the more impact it has. And in turn, the older that negative item gets, the less impact it has.
Okay. let's say a collection, okay?
Okay.
A collection comes up and that has a tremendous impact on the credit. Okay, that can drop it down quite a bit. A late payment on an installment loan, that can impact it quite a bit. Any late payments that are recent usually drives it down. Let's say they had a car payment that legitimately was late, okay? And nothing else is wrong with the credit. They just had that one late payment on the credit card. They can't fix it. They came to the credit expert. The credit expert can't make it go away. How long does it take to cure that score?
Average to get you back to where you were, 2 to 3 years.
Wow. Wow.
You know, I've seen recent late payments affect the score over 100 points,
Wow.
100-point
Yeah.
drop, just because they were 30 days late. Oh, one thing to note too, if you're, 1 day late or 2 days late, 3 weeks, 4 weeks late, it doesn't hurt your score. You'll get hit with the late fee from the creditor, right? But it doesn't hurt your score unless you go 30 days or more late.
And most creditors are pretty much Johnny on the spot. They'll come to you and say, hey, you're late. You missed the first of the month, and they hit you around the 15th. Oh, I didn't know that.
Yeah.
Can I pay you? Let's make it go away. Every
True.
time I get one of those, I ask, is that going to affect my credit? No, it's not. The problem that I experience is that when I do loans for myself, I close the loan is shipped to a servicer. And invariably, I'm not going to mention the name of the lending institution, but when they send the loan, a couple things they don't send. A is the automatic payment withdrawal form, as well as the insurance. Why? I have no idea. So the new servicer gets it. They don't have the HCH form. Consequently, you're not getting the right pull at the right time. That's when I get the phone call. Okay. And in some cases, I've seen some individuals where maybe they missed that phone call from the creditor, or the creditor never called, and they got that 30-day late payment on a mortgage. Bam, that just knocks you right in the socks with the score. Tell me a little bit about that.
It's terrible, it's definitely, transfer mortgages happen all the time, very common. And then because that late payment usually is not going to be removed off, they can't buy a home for another 12 months.
Yeah. Yeah. In the Fannie Mae world, Aaron, correct me if I'm wrong, is it 12 months or 24 months for a late pay?
I think after 12 months, underwriting will look to consider it. Our automated underwriting engine will at least start, considering, maybe making an exception. But yeah, it immediately tacks on. I think if we've got one 30-day late mortgage, then every now and then we could skate by with that. But as soon as that adds up to 2, then we're pretty much, dead in the water for at least probably a year, like Derek said.
Yeah, and if it's late on a car or a credit card, you can still buy a home. It's that late on the mortgage that really affects you.
Exactly, because we're in the mortgage business and we want to keep that paid. Your car payments, your credit cards, we'll let it slide, but we definitely want you to pay the mortgage. That I get. I'm going to do a little sharing of a screen here, and hopefully everybody can see it. This is the Experian website. And the reason why I'm switching over to this screen here is that a lot of people are very nervous about their credit, and so they should. I've been hacked about a year and a half ago. I'm not going to go into great detail, but it can be a mess. Okay. So freezing your credit report, in my opinion, is not a bad idea. Okay. It used to be several years back where it used to cost you $10, $15 from each bureau. When you freeze and unfreeze, you have to pay them. I think the government stepped in and said, no, we're going to make it free, which is good. Okay. So when you're doing a loan, a lot of times they just forget that it's frozen. So we'll let them know, could you unfreeze the loan? They'll go unfreeze it, and they'll unfreeze it for like 3 days. Well, guess what? The way our platform works, the way most lenders work, is we'll get the hard pull up front. And that credit score is good for 120 days. They can buy as many properties they want in 120 days. We'll use that same credit score. At the end, when they're about ready to close, the processor will pull a soft pull like you discussed. It won't be an inquiry on your credit report. We just have to do it to make sure you have not extended your credit any further. So keep that in mind. When you're doing a loan, you can temporarily lift it, or you can lift it during the time period you think that's going to take us to get the loan closed. It's your choice. Either way, if you lift it for 2 days, the process is going to come back to you and say, can you relift it again? Okay. So I put the websites here, and you're welcome to email us and I can send you the three website URLs on this, but Experian, and then you have TransUnion, and then of course you have Equifax. Whoops. And in my opinion, they're very user friendly. They really are. Equifax, Experian, not so much, but TransUnion and Equifax are pretty user friendly. Just a couple of clicks and you're done. Okay. And I do it all the time because I'm buying and selling properties. And yeah, I got a little gun shy once I got credit hacked. And so, yeah, I'll lift it for about 3 or 4, just to say a week. And then right before the end, I'm doing a loan right now. And they said, oh, go unfreeze it. It took me 10 minutes to unfreeze them all, go into the credit score. So these are the websites that you have to use to go to lift your credit. So just keep that in mind. Bear with me just for a moment. We'll stop sharing the screen. Aaron, I'm sure you have a bunch of questions you want to ask.
Yeah, I was curious. I wanted to get your take, Derek. So we kind of talked about Graham reference. Okay, what if we have a late credit card payment or car payment, something that it really was a late payment. It's not, we can't dispute it. And you mentioned just have to wait a couple of years for that thing to fall off. I was curious, say we have a borrower who has a situation like that. And I know this is a loaded question, but what other things can a borrower work on while they're maybe waiting for some type of derogatory payment or something negatively affecting their credit? What other types of things can they do to maybe help improve their credit profile where they're waiting for that to fall off? I've heard of things like, if they've got a separate credit card, maybe keeping that balance in that 30% area is ideal. I'm not sure if that's fully accurate. I want to get your take on any kind of tips and tricks that if a borrower is just trying to improve their credit score, are there any kind of go-to methods out there?
Yeah, well, I would say first off, if they have a negative item when it's a late payment collection, is to contact the creditor and see if they'll remove it out of goodwill. If they really owe it, they were really late, they can still maybe get it removed off sometime. It's rare, but it's worth a phone call. And now if it stays on there, there's a couple tips. So number one, of course, pay your bills on time, right? Don't miss another payment ever again. Credit card balances. Ideally, we tell people to keep your balance on every credit card at 30% or less of the limit at all times. If you want to maximize your credit score, we tell them to keep it at 10% or less at all times. So you want to have different types of credit. So there's two types of credit. There's installment, like a set payment, like a car payment, house payment. A loan is an installment loan. And then you want revolving, like credit cards. So you want a good mix of credit cards. And just, yeah.
We've had some newer borrowers in the past who might be a little bit younger, maybe recent high school or college graduates working to build that credit profile. I've seen things like even self-reporting utility bills, things like that. Is that a potential option? Just kind of get credit. I've seen it from time to time on credit reports. Only reason I ask, and it makes me think maybe that's a tool to kind of help establish that credit profile, maybe for a younger borrower.
It is. If you have no credit, then there's ways to still start building, whether it's to open a new credit card, report your utilities. There's a new thing called self-lender. You can report your rent as well. Okay. There's a lot of ways to build it, but if you're already established, there's no need to do any of those things besides having credit cards.
That's a great tool, that rent reporting thing, and that has to be done through the management company. Is that correct?
Yeah, there's a website that does it, that does rent reporting. They verify you paid on time with you and the landlord, and then they report on your credit report. If you're on time, they'll report it. If you're late, they'll also report it.
Well, so the guy that just came out of college, let's say he doesn't have any student loans. And by the way, let's talk about student loans real quick. Student loans and department store loans inevitably can cream a credit report, and you just don't even know it. Okay. The way student loans are set up is that you get the loan, you go to school, and you graduate. When you graduate, that's when you have to start paying it back. During that time period that you're in school, you're in a deferment, which means all the payments are deferred. Then at the end, and help me out here, how does how does the loan companies that have these student loans know that the individual's graduated and when they need to start paying?
Usually they know. So there's a 6-month grace period usually when you graduate of when you need to start paying. And you might see it on the credit report. You'll see student loans show up 10, 20, 30 different accounts show up on a credit report. And the reason for that is because every different loan is a different semester on the report. And so it shows up multiple times. People ask me all the time is, hey, I can't pay it. I don't want to pay it. What's my next step? I always tell them, so usually student loans are backed by the US government. So they're going to get their money one way or another. So it's better for you to go through and get it back in a repayment, unless they're going to, forgive them in the future. Who knows?
Yeah, of course, there's a lot of controversy these days about the administration and the way they look at student loans and forgiving that, which I wish that was around when I was graduating. But a lot of times what the students or graduates will do is they, like you say, they have a student loan for every semester. Let's just say they have 10 loans out there, okay? Is it good to go ahead and consolidate that into one through Sally Mae or whoever for the credit report scoring?
I'd recommend that. It's easier, makes it all into one. And
Okay.
you make one payment, pays them all.
Okay, and it's easier, right?
Correct.
Okay, go ahead, Aaron, I'm sorry.
Yeah, no, I was curious, Derek, as we kind of talk about little gotchas that pop up on someone's credit report that you might not know about. We talked about how, well, if you go to Credit Karma or your bank, or try to pull your credit score, it's not really going to give you anywhere near a clear picture. What do you recommend as far as a borrower to, even if they're not maybe pursuing a deal that uses financing of any type, do you recommend, how do they keep track of their credit scores through the three bureaus, make sure that there might not be any skipped payments accidentally or things like that? Should they reach out once a year to the bureaus? What's the best way for a borrower just to get their actual credit report without going through maybe a lender or another source where the lender has to pull it?
Yeah, no, great question. So everybody is allowed a free credit report every year through annualcreditreport.com. And you can see every account on there. The only downside is that there's no credit score, but you don't really need it if you know the accounts that you see are there, and you can kind of go through if they are yours or not yours. You can see that once a year for free.
And is that something you can access online?
Yeah,
They don't mail it to you, so you can access it right away. Nice.
Cool. A lot of times, Aaron, how many times have we had people come to us and say, hey, I just had my credit pulled over here. Can you use this credit? No, unfortunately, it's not. The Fair Credit Reporting Act is very, very strict on privacy, if you will, and it's all proprietary. If I use a credit report for a loan with my company, we have to pull it. There's no gray area. Okay, I can't use anybody else's credit, even though they send me a copy of the credit and they go, I don't want it pulled. Well, we went through that about the pulling, how it affects it, how it doesn't. So keep that in mind. We cannot use anyone else's credit report.
When it comes to kind of building, we touched on it a little bit, Derek, but when it comes to building just a credit mix of different accounts, revolving, installment, is there kind of a blueprint for that? I know, the best thing about, it's not great for a borrower to go and open up 5 different credit cards and maybe nothing else. What's kind of a blueprint or a key or a tip for just making sure you have a good mix of different things reporting to your credit?
Yeah, if you're starting from nothing, so you have no credit at all, I'd recommend one installment loan. It could even be like a secured loan, and 2 to 3 credit cards, and keeping those balances low, and doing that for 6 months is going to get you in the high 700s.
Perfect. I did that when I came out of college. I went and got 2 gas cards.
Yep.
Because they were easy to get. I did get a Visa, which was at the time, since I had the 2 gas cards, they said, okay, you're a good credit borrower. And then I got a department store. And what I did is on the gas cards, I go use it once a month, $5 on it, and pay it off. And that's what established my credit.
Yeah, well, I got my first credit card on campus. They're giving out free t-shirts, and I signed up. I got a free t-shirt for a credit card.
I believe I got my first one on campus as well, Derek. And it's just, I know early on, I kept to one of the things, I just wanted to pay it off every month and just kind of kept to that and slowly built over time. And yeah, that for sure seems like a great way to start out.
I've had credit repair companies come to me over the years since I've been in the business. As you say, most credit repair companies want to partner up with a lender or a loan officer because there possibly is a need, and there's some loan officers out there that do a lot of first-time home buys, just out of school, some blemishes on their credit, and they may need some help. And one of the credit repair companies came to me and said, there's like 286 guidelines for credit, how people report. And when used, or the credit report or credit repair company takes a look at the credit and they notice how everything was reported. And if one of those 280 items were done incorrectly, then they can cure the credit report. Is that correct?
There are ways to remove negative items if they're inaccurate, right? So if they can't prove it or they don't report correctly, yes, an item can be removed off that they thought was theirs.
Okay.
One thing too, on the subject of credit repair companies, I would be very careful and, make sure people do their research when choosing a credit repair company, because there's a lot of bad ones out there that don't do anything.
I agree.
And if you're a borrower, another kind of loaded question for you, Derek, but if my credit's a little beat up, when do you take that step to maybe get with a credit repair company? You do all your due diligence, you kind of, you watch good tutorials like this and learning tips and this and that, but when would you recommend a borrower maybe reach out to a credit repair service, of course, after doing some thorough vetting, but to kind of help expedite, when does it get to that point, I guess?
Yeah, so for me, my experience, it only gets to that point is when they want to do something. So if they want to purchase a home, then they're serious and they want to work on their credit. Usually, if they're not ready to buy anything, they don't really care about their credit until they have to use it.
Now,
Yeah.
when I know, maybe I can count on one hand that I had to send somebody to a credit repair, and a lot of times the credit repair company says, "Send me your credit report." So why would they not just pull their own credit, or is it just down to an expense item?
More of an expense item. So most credit repair companies don't have the ability to pull their own credit. If they do, it's through a consumer website where it's an online credit report, which again, that score is not as accurate as the mortgage report. Because from a credit repair company, they're not giving you a loan, so they can review any credit report that you have.
Gotcha. Okay. I'm sorry, Aaron, I interrupted again.
No, I'm trying to kind of scratch my brain here. This has been such a good info here, Derek.
I want to say one thing on that credit report. When we pull a credit report, people say, "Well, what's my score?" We can tell them, but we cannot send them a credit report. The Fair Credit Reporting Act prohibits us from doing that. So keep that in mind. If any lender sends you the credit report, they are in violation of that act, and they can be penalized for that.
Yeah, I've heard of stories where lenders used to share credit reports and they almost lose their license because they get caught.
Exactly. If you do really want your credit report after we pull it, then you have to go to all three bureaus and say, "Hey, Highlands Mortgage just pulled my credit. Can you send me a copy?" And they'll typically send it to you. It's usually by mail. It takes a little bit, but you can eventually get it and hopefully compare notes between TransUnion and Experian and all sorts and make sure it's accurate.
And what's important to note, if you are a borrower coming through with us as well, although we can't send that report to you, we're still always more than happy to hop on the phone with you and kind of help walk you through it, verbally explain, okay, well, you do have a collection here, and kind of help guide you through that. So while we may be able to actually physically send you that report, we've still got our eyes on it. And, as loan officers, that's part of our job, make sure you get the best rate possible. And the credit report has a lot to do with that.
Aaron, tell us a little bit about Rapid Rescore.
Yeah, so a tool that our credit provider, that our third-party credit provider that we use here at Highlands, they have a tool that we call the Rapid Rescore. So essentially, once a credit report is pulled within 30 days, we can run an additional service that does cost, but something that we take care of internally for our customers. And it essentially gives what we would call maybe a quick fix to help boost those credit scores. So maybe it says something as a $50 medical collection they didn't know about. They just need to go pay that off, get the documentation to report that to the bureaus. So the credit, the Rapid Rescore tool we have is a great resource. It doesn't always work. It's not, as I'm sure a lot of you have picked up from this phone call, building that credit profile takes time more than anything. It takes time and payments, but this rapid rescore tool, in certain cases, we can run it and see, okay, maybe the borrower's at a 650 and we're really needing to get them to a 680. Well, it might give us a quick fix. So sometimes there are solutions. That's something that we also offer internally that we look at. It's something that we do always look at before we maybe deny a loan due to credit or something like that. So what's great is there's even if the credit comes in a little beat up, there's still tools, there's still resources out there to help the borrower at the end of the day, the rapid rescore being one of them.
In the rapid rescore, we can pick and choose where we want, or should I say where we ask for where we want the credit to be, okay?
That's correct. Yeah. So we've had some odd cases where maybe that Experian pulls in at 760 and the TransUnion pulls in at 750. And then for whatever reason, that Equifax may come in at 680 or two of them are coming in lower. So that middle score is weighing down the borrower's profile. We can pick and choose a particular bureau. Maybe the TransUnion is the weak link. Well, let's look and see what we can do to improve that. So yeah, it takes, while we, as the credit report views all three as a whole, we can still, if one might be a weak link, we can take that one individually and work on that one alone to see what might help improve it for the borrower.
And as you say, especially on this webinar, it's not always, it doesn't always work. But I'd say it 80-90% of the time, that actually does work, does it not?
It always gives some type of solution, and maybe we were hoping to get 30 points and it might get us halfway there. So it does always, one thing to keep in mind is that a lot of times it's going to take cash to clean up that credit report. There might be a $5,000 credit card with a $5,000 balance that is just eating them alive, and they might have to go pay that off in full. Not something that, it's just a tip. We're going to show them ways, things they can do to their credit. It's certainly never a guarantee. Like you said at the beginning, we're not credit experts, but there's usually ways to finagle it to, hopefully get that credit score up, and the rescore really helps us take a look at that, which is nice.
It's a great tool. It really is. Derek, you have any other closing comments you want to talk about to give advice on credit? Advice only, opinion only. Okay.
One thing on the topic of collections, I would never ever pay a collection unless you get in writing that they're going to remove it off of your report. The reason, if a collection is paid or a collection is unpaid, it's still a collection account. It's so negative, and that still hurts credit score. So you basically, if you pay it off without getting it removed off, it's technically a waste of money.
And also I'm experiencing right now, I'm going through a loan, hopefully closing this week, that I had the credit pulled in December, and the credits last for 120 days. And I did it because I was paying off some loans. I just recently moved and I paid off my primary, I paid off my HELOC, I went and paid off another investment property loans, and I paid off like 4 loans. Derek, does that a lot of times, does that not bring the score down if the consumer pays the account off versus the people that are reporting closing it down? What's the difference between the two?
No real big difference there. You won't see a big drop or a big increase by paying off loans.
Okay.
You're going to see the big drop or big increase on credit card balances.
Okay. Oh, so that's it, credit card balance. But a loan, it's not a big deal. But credit card balances, is it more advantageous for them to get it below 30 and not pay it off?
So one thing is, I never want a client to pay interest on a credit card. So I wouldn't say carry a balance, but I would say never use more than 30% of your limit and then pay it off, at least a statement balance in full, so you never get it charged any interest on that credit card.
Perfect.
That's a great tool.
Yeah. Well, guys, this has been great. We really appreciate you showing up for us today, Derek. I just, credit is it's like my wife, man, it's just fickle. It just never can, it surprises me every day, so, but this has been great. And once again, this is just some helpful, not advice, but our opinions. And if you have any other issues with your credit that you're trying to buy a house or an investment property, give us a call. We'll discuss that with you. And then worst case scenario, we'll just pull it and give you the correct advice. So if you need any other comments or questions asked, please give us a call at 855-326-6802. Thank you, Derek. Thank you, Aaron. And if you see this on YouTube, please subscribe.